What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this video is a brief or text short interest and utilization update so we can get a better understanding of what we have going into the beginning of this week. Now, the utilization has been starting to tick up towards the end of last week. We're going to go over exactly what that means and how that could affect us going forward. Now, with the talk about gamma squeezes that we've been seeing over the last couple of weeks, we definitely need to look at the gamma squeeze potential for not only this upcoming week, but for the September monthly options expiration date, which is always going to be a very important expiration date because we typically see the open interest and volume be a lot higher on those monthly options expiration periods versus the weekly options expiration dates. Now, we also have some more updates on what I like to call the automatic margin call rule. We now have a set date where this is going to be legally enforceable and where these supplemental liquidity deposits are going to be actually given to the NSCC. This is a pretty big deal in my opinion and just furthers the liquidity drain that we have been seeing over the last couple of weeks and months, and something that we've all been really looking for. Now, this also comes right around the same time that we are going to see the DTCC's Phase 5 UMR. This is also another really big proposed rule change that is really going to suck a lot of this liquidity out of the market, and it is going to make it a lot harder for these institutions to get massively over leveraged on positions and could lead the way to a massive upsurge in margin calls. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And the more people that we have staying up to date with accurate AMC information, the stronger our community becomes. And if you want to see more videos like this, make sure you hit that subscribe button. So we closed the Friday after hours trading period at $41 even. So another Green Friday in the books. It's always good to see these Green Fridays because typically in the market, when we see a Green Friday, it is very likely, according to the trends, that we could also see a Green Monday. Now, when we come over to Ortex right here, the utilization is at around 92.95%. Now, the utilization is the shares that institutions are willing to lend versus the amount of shares that have already been lent out. So when we see this number start to go up, it suggests that there's less loanable shares out in the market. If we can see this utilization get above 95, 98, 99, the cost to borrow rates are going to skyrocket. AMC will become a lot harder to borrow stock, and it is going to put a lot of pressure on these institutions trying to get shares to short. Now, we also see the estimated short interest at the current time at 17.17%. Still incredibly high. The shorts have not covered, and we are still in the same position. Now, when we come over to Stonko Tracker right here, going into next week, we have 24,000 calls in the money and 6,827 puts in the money. So if we are going to see any hedging at the opening bell on Monday, it would lean more towards buying volume, and we could see a tiny little uptick in the price due to this buying volume coming in. But again, similar to what we saw last week, we started off with not so many calls in and out of the money. The open interest was not that high on either the call or the put side. But as we saw last week, we could easily see a lot of people start to pile in on weekly contracts. Now, there is a debate surrounding whether options are helping or hurting us. Again, weeklies, deep out of the money contracts are most likely going to expire worthless and give these institutions the liquidity that they could possibly need in order to maintain these other short positions. But again, they are selling options on every single stock in the market. So AMC, the microcosm, the micro situation that we have here, isn't really going to do that much if all of us were to stop trading options. Now, when we look at this September 17th monthly options expiration date right here, this is something that I want people to keep paying attention to. We already see 114,000 calls in the money with 245,000 contracts out of the money. If we are able to see an increase in the share price of AMC for whatever reason over the next couple of weeks leading up into this monthly options expiration in September, we could see even more buying volume from these institutions that is just going to feed into that positive feedback loop that really triggers that that gamma squeeze. Now, let's get into this automatic margin call rule situation and how important this is going forward with not only the situation surrounding AMC and GameStop, but with the broad market as a whole. Now, when we come over to this DTCC filing right here, the NSCC has proposed to increase the minimum required fund deposit for each member from the current $10,000 to $250,000. Now, when we come down here, the NSCC is providing this notice to its members of the implementation and effective date September 3rd, 2021. What does this mean? Well, on the morning of the effective date, members with a fund deposit below $250,000 will incur a deficit that will require funding by 10 a.m. Eastern Time. This is like a one-time automatic margin call where they're going to have to cough up all of this liquidity and give it to the NSCC in order to maintain those liquidity standards that have been set out for them. Now, there are a couple of things that I don't think a lot of people fully understand about this new proposed rule change that is going into effect, NSCC 005, and this brings us back to Kringle Kitten's Twitter tweet right here, where it says, providing some clarity on NSCC 005. Now, when we look at this, let's assume Goldman Sachs would have 30 accounts with the NSCC. They would have to provide $7.5 million worth of collateral. So Goldman Sachs is one member, but if they had 30 accounts, they would have to provide that minimum required fund deposit for all of those separate accounts. Now, the NSCC has about 3,400 members at the current time. Those members are all going to have a lot of different accounts at the National Securities Clearing Corporation. This could amount to billions of dollars in increased margin in collateral that these institutions are going to have to give to the NSCC. This is a pretty big deal. Now, I don't think this is going to be a catalyst that's just going to set off the squeeze. These proposed rule changes are good. It really gives us an understanding of where the regulatory institutions are trying to basically push the market in one direction in terms of more transparency and less over leveraging. But again, it's not going to be a situation where we're going to see that September 3rd date come around at 10 a.m. Eastern Time. We're going to see the squeeze. That is not what we are saying here. Now, in addition to this, we are also seeing this new Phase 5 UMR basically new margin requirement that the DTCC is putting out. UMR's requirements for posting initial and variation margin and mandatory central clearing of OTC derivatives are raising margin call volume and the amount of collateral required substantially. This is happening on September 1st. So we have September 1st. With this rule change that they are expecting an upsurge in margin calls, there's going to be the need for an increase in third-party custodians to keep that safe collateral. And that also really hinders the ability of these institutions to mess around with these margin requirements and kick the can down the road. Now, what we really need to think about here is what is the total size of this derivatives market? OTC derivatives, the exposure is very substantial. The last time it was updated, it was about $582 trillion globally. You heard that right? 582 trillion with a T. Now, shout out to AMC Bigums over here for taking a look at what the actual derivatives exposure is. When we can see here that the derivatives market is, in a word, gigantic, often estimated at over 1 quadrillion on the high end. How can that be? Largely because there are numerous derivatives in existence available on virtually every possible type of investment asset, including equities, commodities, bonds, and currency. A really good example to explain this is if you remember in the movie The Big Short, when Mark Baum is talking to that CDO salesman and they're having a conversation about how much money could be potentially being bet or wagered on those different CDOs at any given time, and those would be these types of derivatives. It was about a 20x multiplier, but they don't necessarily know the number. That is very similar to what we are seeing here in how this derivatives market can get way out of hand. So we have a lot of really good things coming for us over the next couple of weeks and leading into the end of Q4. It makes me extremely bullish on what we have for AMC and the potential for a massive price run-up over the next couple of weeks and months. If you have been looking at that cycle theory or any of the technical analysis that our other creators have been putting out, it all does suggest that we are going to see a pretty significant uptrend in the AMC share price. Now, do we know if that's going to happen for sure? Absolutely not. Nothing in this market is guaranteed. But Again, all of the information that I'm seeing right now just furthers my conviction on this stock. It makes me extremely bullish on what we have going forward. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button. So I hope you guys are having a great weekend, and I'll see you guys in the next video.